Economists are somewhat optimistic about the upcoming interest rate decision by the Reserve Bank. Inflation numbers released by Statistics South Africa yesterday surprised many as the consumer price index set back from 6.2% in April to 6.1% in May. Now, joining us to talk more about these figures and to talk about the Brexit vote, we've got Simon Mohapi on the line. Simon, thanks so much for being with us. Welcome to Morning Live.
Morning, Leanne, and morning to the viewers.
Now, let's just start off by talking about those inflation figures. Were you also surprised by them?
Yes, indeed. To be honest, we come from as high as 7% early in the year. And, to come to as low as 6.1%, it's quite remarkable. However, remember, market consensus was anything between 6.3%, 6.4%. But I can tell you now, we should not get excited by these numbers.
What do these numbers actually fundamentally mean for ordinary South Africans? I mean, what can we read into it?
What we're looking at now, we're talking more to our headline inflation, which is 6.1% year on year as at the end of May. But when you look at our core inflation, which excludes petrol, energy, food, non-alcoholic beverages, that is where our threat is, especially in as far as the food prices are concerned. Food inflation has been rising. We know we're coming from the terrible days of a drought. We still are actually experiencing the results of that drought. And what also concerns me most is the structural makeup of our economy. I don't think we're anywhere different from what actually happened at the start of 2016. For instance, we talk of operating well above our inflation target. The official target of South Africa is 3 to 6%. We're well over 3 and 6%, which is not good news, especially when you have to talk from the investment point of view. Remember, we always want to achieve inflation-beating returns. And I can tell you now, our real returns are not looking good at all, so long as our inflation is as high as it is at the moment. But going forward, Leanne, one of the things that we need to be mindful of is we see rising oil prices. That poses a very big threat. Because as that happens, remember, we're going to be importing a lot of inflation as South Africa. And at the back of that, you're going to find that your investment returns, your economic growth is going to be declining. More so, remember, our economy is quite fragile at the moment. When you look at the numbers, your motor vehicle sales, they are quite low. When you look at your retail sales, consumer spending has slowed down. And these things are talk to the consumers, the individuals in South Africa. Our spending power has declined, the high levels of indebtedness. These are the things that are characterizing our economy at the moment. And we need to be very, very careful. Hence, that slow economic growth. And that is why also we see the slowdown in consumer spending. Those two don't talk good to economic growth that we're expecting in South Africa.
Yeah. All right. Just two quick questions, if you can answer them quite quickly, because I want to talk also about the Brexit vote happening today. This recession talk is hanging over our head. I mean, we saw these numbers coming in yesterday. We were all pleasantly surprised. Has this sort of abated the talk of a recession here in South Africa? And finally, interest rates. Again, many fearing that we could see interest rates rising. Is this perhaps another chance for us to see them being put on hold?
In the short term, Leanne, as far as the interest rates are concerned, I don't think we need to be very much worried about that, so long as our inflation is coming down. So at least those are good news. But yes, we are worried in terms of recession, 2 negative quarters of negative returns. Remember, that's where the threat is. So long as we're talking of, if you, for instance, look at the first quarter of 2016, we saw a contraction there. And if we are to continue, experiencing that kind of a thing, the manufacturing sector not doing well, the mining sector not doing well, there is a very big possibility of us, reaching a recession, which will not be good news. However, if that happens, obviously, you don't have to worry about rising interest rates because your inflation will be well under control. So the spending power is going to decline because of the low growth and because of the recession. But yes, there is a chance of recession in 2016 in South Africa, but in the short term, we don't really have to worry about the monetary about the interest rates. The monetary policy is going to be managing inflation, and so long as we don't have any inflation threats going up at the stage, we don't have to worry. However, like I warned earlier, we need to guard against rising oil prices, because when that happens, and against a weak rand, thanks God, our rand has been firming these days, but should it weaken, and we're going to start importing a lot of inflation, and as that happens, you know that we're going to be experiencing a lot of inflation again in South Africa, and prices shooting up.
Yeah. Okay. Let's now move on to the Brexit vote, the referendum that's going to be taking place today. Asking you to predict what you think is almost asking you to give me the lotto numbers. It's become that difficult to tell what's actually going to be happening. But I mean, if you have to put your neck on the line, what do you think? Do you think Britain will stay with the EU, or do you think they're going to leave?
My gut feel is Britain will stay in the EU.
Okay.
If it stays in the EU, good news for everybody, because at the moment the rest of the world is divided. And this potentially will deter investments. There is a risk to economic growth. Yes, the minorities favorably are saying they want out, but we're talking of the minorities here.
Yeah,
it is big business that is giving me confidence to saying they want to stay in the EU, because once they pull out, remember we're going to be experiencing loss of jobs, low economic growth, the national income will suffer. But again, when you look at what the Institute of Directors, the IOD polls are saying, they are also favorable, saying they wish to stay. But financial markets will behave differently. Let's assume, and let's say, Britain pulls out. Then we're going to really see big turmoil in the rest of the world. For instance, the waiting period, it's a reckon that we may wait something like 2 years before markets settle. As that happens, countries like South Africa, we have to go and negotiate new contracts, new deals, and it's not going to be good news. Imagine what this does, to economic growth in the rest of the world. Imagine what this does to our currencies. It won't be good news. So yes, if they stay, at least that will bring some stability, and it will also reduce market volatilities in our financial markets.
Yeah, indeed it would. We'll have to wait and see on that one, Simon. Unfortunately, running out of time. But thank you for all of your insights into those inflation figures and also the Brexit. And I mean, you've got to understand that we, as South Africa, Europe is one of our biggest trading partners, and I'm talking about Britain, our biggest trading partner. Over 25% of our trade is coming from Britain, and that, of course, with trade barriers being put up, if Britain does leave the EU, that'll have a big repercussion on us. So we're watching just as closely as the rest of the world. Simon